Hey everyone, and welcome to this explainer. Today, we're diving into a really fascinating tool for your retirement strategy. If navigating post-career planning has you feeling a little overwhelmed lately, stick around. We're going to unpack the mechanics of the Knighthead Life Chartline Bonus Fixed Indexed Annuity. And trust me, it's pretty clever.
Right off the bat, we run into the ultimate retirement dilemma. How do you actually protect your money without completely sacrificing growth? Look, we're living in an economic environment where uncertainty is basically the norm. You're dealing with rising interest rates, relentless inflation, and wild market swings. On one hand, you desperately want to capture growth so you don't outlive your money, right? But on the other hand, the thought of a sudden market crash wiping out your life savings is just terrifying. So how do we actually solve this?
Well, here's our roadmap for today. We're going to start with that core dilemma, introduce the solution, explore the mechanics of the upfront bonus, see exactly how your principal is protected, figure out how it fits into your broader plan, and finally, look at how to get some expert guidance.
All right, part one, the dilemma. Think about your traditional conservative assets for a second. You know, things like standard savings accounts or CDs. They are undeniably safe, which is great. But let's be real, the trade-off is usually a super low yield that really struggles to keep pace with inflation over a long retirement. On the flip side, the Chartline Bonus FIA is designed to offer that exact same principal protection, but it bridges the gap by giving you significantly stronger long-term market-linked growth potential. For anyone looking to reposition their conservative assets, solving that equation is incredibly appealing.
Moving right along to part two, the solution.
So, what is this solution exactly? Well, the Chartline Bonus is a fixed index annuity, or FIA for short. And the absolute game changer here is this. Your premium earns interest tied to the performance of recognized market indices, but your money's never directly invested in the stock market. You get the upside growth potential of market-linked strategies without the nightmare of direct market exposure. And honestly, the flexibility here is fantastic. You aren't just boxed into one option. You can tie your growth to major, recognizable indices like the S&P 500, the NASDAQ 100, or even the Dow Jones and STOXX Europe 600. Or, if you want a totally streamlined approach, there are 3 pre-built model portfolios that automatically diversify and rebalance your premium every single year. It takes the guesswork entirely out of the equation.
Okay, part 3, the upfront bonus. This is where it gets really interesting.
20%. Seriously, when you make a single premium deposit, you can immediately receive a premium bonus credited to your accumulation value. If you're between ages 0 and 75 and you go with the 10-year term, that bonus is a full 20%. They also offer 5- and 7-year terms with 10% and 14% bonuses respectively.
Think of it like a massive compounding head start. Let's say you deposit $100,000. Rather than starting from a flat baseline, a 20% bonus means you're instantly accumulating interest on $120,000 right from day one. Over a full 10-year term, those extra working dollars can just substantially impact your long-term retirement goals. Just a quick heads up though, this bonus does vest over the term, meaning it's subject to a recapture schedule if you surrender the contract early. And that is exactly why you want to make sure you align the term with your actual timeline.
Which leads us perfectly into part 4, protecting your principal.
Let's talk about a concept called the floor of zero. It is deeply reassuring. Basically, if the index you chose goes up, you capture a portion of those gains through a cap or a participation rate. But, and here is the magic, if the index declines, or if the market crashes entirely, your account just stays flat. Your credited interest literally never falls below zero. Your initial premium plus that credited bonus is completely shielded from market losses. Your accumulation value won't drop a single cent just because Wall Street is having a bad year.
Part 5, the broader plan.
So how does this actually fit into a comprehensive retirement income strategy? While this is built for long-term accumulation, it's highly adaptable for the real world. If you're using qualified funds like an IRA, your required minimum distributions, or RMDs, are available penalty-free starting in year 1. Then, starting in year 2, you can withdraw up to 10% of your prior anniversary contract value every year without triggering any withdrawal charges. That gives you structured liquidity to supplement your income, handle emergencies, or coordinate with Social Security.
Now, a quick side note here, you might have heard of an MVA, or a market value adjustment. Honestly, it's one of the most misunderstood features out there. The crucial thing to remember is that an MVA only applies to early excess withdrawals. It literally never affects your planned free 10% withdrawals or your scheduled RMDs. It's just a mechanism to maintain fairness if someone bails on the contract entirely before their term is up. If you just stick to your plan, your regular access to funds remains completely unaffected.
And finally, Part 6, Expert Guidance.
As helpful as a general explainer is, every single annuity decision should be based on real numbers. Premium bonus amounts, cap rates, withdrawal schedules, they all vary heavily based on your specific age, the amount you put in, and the term you pick. That's why working with a trusted, consumer-friendly expert isn't just a good idea, it's non-negotiable. Jason Stoltz and the team at Diversified Insurance Brokers are fiduciaries. They have access to over 100 highly rated insurance carriers and bring over 40 years of real-world experience to help tailor this exact strategy perfectly to you.
So, what are your next steps? First, take a hard look at your current conservative savings, like those CDs. Are they earning what they really should be? Second, if you're ready to bridge the gap, request a personalized illustration of the Chartline bonus from Diversified Insurance Brokers. And third, use those hard numbers to secure your principal from market losses while capturing that long-term growth and that incredible upfront bonus.
I want to leave you with one final, very important thought. Are your retirement dollars working as hard and as safely as they possibly could be? The Knighthead Life Chartline Bonus FIA offers an absolutely fascinating blend of protection and potential. If you want to explore the facts for your specific situation, definitely reach out to Diversified Insurance Brokers today and see if it's the right fit to bring stability and growth back into your retirement plan. Thanks so much for joining me on this explainer, and hey, here's to a secure, stress-free retirement.